Hello, welcome everyone to the Tradimo Live webinar. Thank you for coming, and before we get going, I'm just checking if sound is okay. Just checking my control screen. Yeah, I can hear myself. Great. So today we have a new guest presenter, Viktor Neustroev, a trader and educator who will be holding a three-part webinar series. We called it the 2016 Year-End Volatility Webinars. As you may have noticed, 2016 has been already a very volatile year for the markets, but the action is far from over, with Trump winning the presidency earlier this month, because during his campaign he pledged to reverse some of the key policies of the Obama administration, and this, together with the very much anticipated December Fed rate hike, could see additional wide swings in the market. And Viktor will just give his take on what he expects in the markets and how to sort of prepare for this upcoming volatility in the coming few weeks. He has been trading the market since 2003, and he is active in the FX commodities space, but his true passion is options. And if you'd like to find out more about how he trades, you can simply just scroll down, and underneath the video you'll find his courses on Tradimo. I'm just going to show you here on the platform. Mostly the courses are in English. However, he has a couple of courses also in Russian. This webinar was brought to you by Trade 360. And Trade 360 is a crowd trading broker. They have revolutionized the concept of online trading with the introduction of crowd trading, a unique technologically advanced approach to trading currencies, commodities, stocks, and CFDs and indices. For more information, again, please check out the description underneath the video. And without further ado, I'd like to call Viktor now. And Viktor, please begin your presentation. I'm just going to stop sharing my screen.
Okay, thank you, Peter. Hello, everyone. Thank you for joining this webinar. And first, let me introduce myself. Actually, Peter already did it. My name is Viktor Neustroev. I'm Russian, and English is not my native language. That's why you hear such an accent. And sometimes I also make mistakes. I apologize for that in advance. As Peter said, I'm an option trader and commodity market analyst. Since 2003, I have been trading financial markets, starting with Forex, and then broadening horizons to the commodity markets. I specialize on agricultural markets because I consider them to be more transparent. Ag markets dynamics usually depends on supply and demand factors. For example, if world corn crops are going to be plentiful, the market will decrease. If demand is higher than supply, the market usually goes up. So the main idea of trading ag markets is that it is easier to predict supply and demand changes than to focus price movements. So that's why trading ag markets based on fundamental approach seems to be the best way to earn money for me. I don't know how it is for you, but for me it's the best way. Of course, when you trade commodities, there are a lot of factors to analyze. For example, when I plan to open a position on any ag market, I have to analyze and try to understand what market atmosphere is and what will happen with stock market and how it might affect the certain commodity that I'm going to trade. That's why I always pay much attention to politics, dollar, and stock market fluctuations. Okay, let's now go back to our webinar topic. I remind you that today I'm going to share with you my ideas about Trump election and Fed decision to increase interest rate. I divided this webinar into 4 parts. The first part, I will try to explain you immediate market's reaction on Trump election. Then I will tell you how investors' expectations changed. And I'm also going to tell you what factors Federal Reserve System takes into account when they decide whether to increase interest rate or not. And in the last part, I will provide you with a few forecasts concerning market reaction in case of hiking the rate in December. Okay, so what I should mention first is that Trump election was a real surprise for most participants on financial markets. And of course, Hillary Clinton as a president was the most convenient option for most market participants. And of course, you may argue with me, but I think that if she had won, then market would have been stable because most people know what to expect of her policy. She would probably have continued Obama's policy, and I believe it wouldn't have affected the markets. And the general trend would have been continued, of course. If speaking about Fed decision and looking ahead, in case if Clinton won, nobody would doubt about Fed decision to hike the rate in December. However, Donald Trump won, and let me show you the immediate market reaction. This is the chart of dollar index, and I pointed the day of election with a red tick. This is a daily chart, and you may see a huge down shadow. It happened during the first hours when it became obvious that Trump would win. Why did it happen?
Sorry, Victor, let me just interrupt you for 1 second. Your screen might be frozen because we still see the opening page and we don't see the chart.
Okay, let me try again. Do you see the chart?
Yes, I can see the index now. Yeah, the index chart.
Okay, so let's continue. I'm sorry for that. Here is the chart of dollar index, and this is the day of election, which is pointed with red tick. And as I said, here is the huge down shadow during the first hours when it became obvious that Trump would win. So let's continue. You may ask me why dollar dropped in the first few hours. I believe it happened because investors didn't expect Trump to be elected, and moreover, they even didn't understand what to expect from him, because you know that Trump gained the image of reformer. Actually, the same tendency you can see at other chart. This is euro against American dollar, and here is the spike. The same pattern happened on S&P 500. The market dropped significantly, but then recovered. And this is gold. The price hiked, but then regretted. What else? I also would like you to notice that Mexican peso rate dropped significantly. For example, this is a chart of American dollar against Mexican peso.
Sorry to interrupt you again, but somehow when you switch the slides, it's not visible for us. I don't know if what we can do about that.
Maybe I will share. I'm going to share the whole screen. I mean, not only the presentation. Let me do this. Okay, what about, do you see my browser? I use Opera and all these pages. Peter, do you see that?
Right now, I just see the Microsoft Office.
Okay, and now you see this presentation?
Yeah.
And when I switch from one slide to another?
I see the Mexican peso now.
Yeah, this is okay. And the next chart.
Yeah. Now I see. Now I see it. Yeah.
Okay, so I will stick to this way, and just I will share the whole screen.
All right, great.
Okay,
great, thank you.
This okay, as I said, this is a dollar against Mexican peso, and you may see that the peso rate dropped significantly. So in this chart, this is we see the increase because dollar stays in the first place and Mexican is second. So the reason for this fall of Mexican peso is connected to Trump's promise to build the wall around Mexican border. Okay, so to sum up it, in other words, we can say that Hillary Clinton's victory has been already founded in the market price. And you may see that some investors decided to leave their positions because they considered Trump and his future policy less predictable than Clinton's. And now let's go back to some of these charts. For example, gold. I believe you see this chart. And I'm going to show you what happened the next day after election. This is the next day after election, and market attitude to Trump and his potential reforms changed. As proof, I can demonstrate all these charts. Because in every chart you can see how the market trend, which was before election, continued. For example, euro against American dollar decreased, then hiked in the day of election, and then continued to decrease. So it means that investors' expectations changed. There are two main reasons for that. The first reason is that investors who were against Trump mainly left the market, or at least they adjusted their positions. Another reason is that Trump made clear, and of course investors realized that election promises and real reforms are two different things. You may know that the president-elect has promised to stimulate faster economic growth with measures that include a large tax cut and as much as $1 trillion being spent on infrastructure. He has also promised to establish new barriers to imports, which could easily drive up inflation. And Trump, as a president, will be more conservative. Of course, everyone understands that we are waiting for changes, but these changes will be gradual. How have I understood that market expectations changed? I just look at the chart of gold and I saw that market was decreasing day by day. For example, the day after election, the next day, and so on. It means that market participants reduced their assets in gold. and invest this money in more risky assets, such as stock market, for example. This is S&P 500 index, and you may see that now it's near its resistance level. Okay, I believe I explained you how investors' expectations changed, and now let's focus on Fed expectations. And first of all, I would like to tell you what factors they take into account when they decide whether to increase an interest rate or not. Okay, I have 3 next slides which demonstrate the factors. But first, let me tell you this story. You may know that the Fed has signaled in recent months that it would like to raise rates for the second time since the financial crisis. For example, you see that the interest rate was raised only once at the beginning of 2016. Actually, not at the beginning, but at the end of 2015. And now, Fed would like to raise rates, bearing any signs of fresh economic weakness. For example, last week, the Fed's policymaking body, the Federal Open Market Committee, said that the case for higher rates continued to strengthen. You also may know that Fed started the year predicting that it would raise rates by 4 times, but instead, the Fed left rates untouched. Now, you may know that the growing number of Fed officials are publicly advocating a rate increase, and the Fed has carefully prepared markets for the likelihood that it would raise rates. However, they have several weeks to watch and wait. Their next meeting will be on December 13 and 14. But what I should also say, the Fed's assessment of economic condition was also just a little more beat than it was in September. The most significant change is an evidence of strong inflation. The November statement of Fed said inflation has increased somewhat, rising closer to the Fed's preferred annual pace of 2%. The current inflation rate in October is 1.6. The average number is only 1.1%. However, inflation rose by 1.2% over the 12 months ending in September. What is up from 0.8% during the 12 months ending in July. According to what I say and according to Fed expectations, you may understand that the health of the American economy has continued to improve. The unemployment rate stood under 5% in September and November, and it's very close to historical normal level. And of course, the economy expanded at an annual pace of 2 and 9% in the third quarter. So in early December, Fed will be looking at inflation indicators, unemployment rate, and of course, Trump's sayings about American economy's future. But I probably think that the Federal Reserve will remain on course to raise its benchmark interest rate in December Investors generally reacted with equanimity to the election of Donald Trump. So now, when you assume that Fed is going to hike an interest rate in December by 0.25%, let's try to focus future market reaction. But before we proceed, you can ask me a few questions in the chat. Let me show you this chart. Here it is. This is a right column. So in the right side of the page, if you have any questions, don't hesitate to ask me, and I will answer right now, or maybe after the webinar. After I will share my thoughts about market reaction to Fed hike. Okay, if there are no questions, let's continue. I'm going to show you what usually happens when Fed increases interest rate. And then I will explain your market reaction. Okay, when Fed increases federal funds rate, it means that it becomes more expensive for banks to borrow money from the Fed. And increases in the federal funds rate also cause a ripple effect. The first indirect effect is that banks increase the rates that they charge their customers to borrow money. Individuals will be affected through increases to credit card and mortgage interest rates. And individuals will have less money to spend, and companies' profits are likely to decrease. Moreover, companies also borrow money from banks for their business operations. So when banks make borrowing more expensive, companies might not borrow as much. And of course, they will pay higher rates on loans. And less business spending can slow down the growth of the company. And it may result in slower economic growth. What will happen to stock market? As I already said, companies' profit is going to decrease slightly. And it might stop stock indexes from rising. Furthermore, investors understand that high rate will have a negative effect on stock market. And of course, they may consider to decrease their investments in stock markets. But to invest their money into safe assets such as treasury bills and bonds, American dollar and gold. What else? As a possible option, investors may switch to commodity markets, but I really doubt that commodity prices would increase. You may ask me why, and in this case, the main factor is dollar. When we say that Fed makes money more expensive, it also means that supply of American dollars will decrease, and dollar becomes more expensive relative to other currencies. It has absolutely negative effect on commodity market. Therefore, I believe that commodity markets, including crude oil, will decrease. Not much, but you should also take into account internal factors which affect a certain commodity market. For example, if you're speaking about agricultural commodities, then you should then you should try to get better focused. and of course take it into your account. Okay. Uh, uh, and about I said that commodities markets are going to decrease, but gold is going to rise because, as I said, investors will transfer their money from stock market to more safe assets such as dollar and gold, and maybe some treasury bonds, treasury notes, maybe. Okay, we will see it. To sum it up, I would say that Fed rate hike in December is very likely, and you should be ready for it. You should definitely adjust your current positions. As I see it now, the stock market would slightly decrease. And I think that in general, if you coming back to S&P 500, in general, this is what the economy needs, because I'm sure that stock market is overvalued now. As for American dollar, I think that dollar might rise against other currencies, and dollar just will continue its trend, and it will be one of the reasons why commodity market might drop as well. This is my opinion, and sometimes I can be wrong, but when you make trades, you take all the risks yourself. However, I have a very useful piece of advice for you. Always observe gold market, because you will understand what investors are going to do and what their current attitude to risk is. For example, if the market is decreasing, it means that investors are in a good mood, and they would like to take more risk, and it means that they reduce their positions in gold market and invest them in more risky assets. It may be a real business or stock market, or maybe a commodity, or maybe other commodities, maybe some agricultural commodities, which are more risky than gold, but I'm sure that they have less risk than stock market. So stock market is also risky, and moreover, it is overvalued now. I'm waiting for any correction on S&P 500. I'm not sure that it will drop significantly, but and maybe at least 15 points. I think maybe it will drop to 2,150. And I believe it can happen in 2 weeks after Fed release its statement and hike the interest rate. Okay, so this is actually what I wanted to tell you, and if you have any questions, don't hesitate to ask them. Okay, I will just check if there are any questions. If there are no questions, What else? Please don't miss my next webinar next Tuesday. And Peter, are you here?
Yes, I am.
Okay, actually, this was what I wanted to say, and I see that there are no questions. Maybe you have some, and we can end.
Yeah, I was actually wondering myself about some of the policies, like what you think about like specific ones, for example, like reversing the climate change agreement, how it will affect certain business sectors. For example, do you think it will mean that maybe it's going to be Europe the center of innovation for green energy, or will it completely ruin the green energy sector by, increasing the fossil fuel output, making it cheaper, and, just generally pushing prices lower on commodity markets? Do you have any take on that?
Okay, I will share what I think about it. Let me go back, I think, to this slide. Okay. The first question you ask is about real business and about green energy. What I can say, I believe that borrowings will be more expensive, and not only for real business, for real business, and including the companies which operates with green energy, which produces the green energy, and in this case, their projects becomes how to say that, so not so it will be hard for them to borrow money, and they can borrow only on higher rates. That's why the green energy will become less profitable for investors. I can't say that just a small increase in interest rate will definitely do this, but if now, for example, we hike an interest rate from 0.25 to, for example, 2%, then it will definitely affect the market and the real business, because there is a big difference between 0 and 2%. But it will affect mostly American companies which operate in United States and which don't have an access to international funds.
So it could actually benefit some European companies, in your opinion?
Yeah, I think yes. So, for example, European companies which compete with Americans, so it will be easy for them to win competition and to sell their commodities. So to sell what they produce in America, because they will have more opportunities to borrow more money, and then they will expand their business operations. But at the same time, we should always remember about Trump's promise to cut imports, and actually there is two side effect. So I'm not sure, but in general, it will help American European companies to succeed. And as for international companies, then I will say that it won't make any effect on international companies, because they have a lot of sources to get money from in United States or everywhere in the world.
Okay, so it's quite a complex subject, and if we take into account also the pledged corporation tax cut, that on the other hand could be beneficial for businesses. So maybe that's something that might offset the increase of borrowing costs. So I guess it's not there's no doom and gloom scenario, but there's also no reason to sort of celebrate for any kind of sector. And I think it's going to be a really, really tough ride around
Yeah, I agree. I agree with
next
you.
couple of months. And I think the only certain thing is just the uncertainty, isn't it?
I agree with you when you said about tax cuts and how it affects companies' profits, and it may offset the increase of interest rate, but at the same time, now it's just president-elect promises. So now we don't see any deal. So so that Trump was elected, Donald Trump was elected, but I don't see that he makes and he involves these tax cuts for companies. He's not president right now. He will be inaugurated in January, if I'm not mistaken. So now Obama is the president, and he's going to continue his policy, and nobody is saying about tax cuts. It will affect, of course it will. And actually, yes, it may help the whole American economy to grow faster, but I really don't understand where to get money for American budget if they cut taxes from huge corporations.
Okay, thank you very much. If there are no more questions, then I would like to wrap up the webinar. Thank you, Viktor, for the great presentation. I hope everyone who joined live or who will be watching the recording will enjoy it too. And if you like the concept presented in this webinar, and you'd like to learn more about how Viktor trades, just visit learn.tradimo.com and look for his courses. Alternatively, you can just check out the links in the description box below. And a big thank you to Trade360, who has sponsored this webinar. And we're back in a week's time on the 29th November. It will be a news trading webinar, how to trade news. And there will be one more webinar 1 week later on the 6th December. And that's going to be another little bit more hands-on, less theoretical webinar. Viktor will teach you how to draw trend lines. He's going to give you his formal step-by-step guide. So until then, have a great trading week, and we'll see you next week this time. Thanks again. Bye-bye.
Yeah, thank you.